And this one's exciting. Titled Beyond Proof of Concept, Institutions Building on Chain. And actually all of us here on this panel are building on chain. And we're going to get into, generally the people on this panel don't need introductions. I'm going to start with myself, but then we're going to all introduce ourselves because we're all working on tokenizing different things. And this one's personal for myself, to be honest with you guys, because I quit my job. I used to be an anchor at Yahoo Finance and CNBC before that, thinking that we would one day arrive here where everything would be tokenized. Everything would come on chain. But I quit to start a media outlet that is tokenized on chain, which is not near the size of what you guys are doing on chain. But we're going to start with intros. We'll go down the line and talk about what you guys are doing at Apollo, BlackRock, and Janus. We'll start with you, Max. Why not?
Yeah, I'm Max Stein. I'm on the digital assets team at BlackRock. I've been at BlackRock now about 4 years, and our team is really focused on driving tokenized assets, and that's our BUIDL fund. Crypto assets, and that's through our ETFs, IBIT and ETHA, and then stable coins and our work with stablecoin partners and managing their reserves.
Nick Cherney from Janus Henderson. Have spent most of my career in ETFs, and then last couple of years focused on various projects around the firm, but nearest and dearest to my heart being our tokenization efforts.
Christine Moy from Apollo. Apollo is a $750 billion asset manager with businesses in private markets and retirement services. I'm a partner leading digital assets, data, and AI. Have spent the greater part of a decade working on the tokenization of real-world assets. And so from the seat of Apollo currently, really focused on tokenizing private credit funds and building durable, scalable yield for the crypto ecosystem.
So what we're going to walk through is, obviously, this whole panel has been working on this for quite some time. I know, Max, your kind of journey started back before on-chain at Consensus. And I think what would be cool to take away from this is kind of where we've come from, where we are now, and where we're going. I think a lot of people here want the alpha. They want to know, how do I make money here and what's coming next? They want to be ahead of the curve. And when we think about kind of what needs to get right, Max, why don't we just start with you in terms of what you think has changed? This has been a huge year in terms of even getting to this stage to be able to experiment with bringing assets on chain. But for you, where do you think we're at in this journey?
Yeah, I think it helps to think through institutional sort of experimentation or adoption of tokenized assets through various waves. And the first wave lasted a really long time, maybe 9 years. And it was institutions targeting other institutions on permission networks. And the challenge there was, well, there wasn't any urgency. And on a permission network, cold start problems, you didn't really have any activity or network effects. So a lot of those proof of concepts really didn't go anywhere. In the phase that we're now in, and I think Apollo, Janus, and BlackRock have all played some role in this, is a shift in that narrative, which is focusing on targeting the crypto natives and actually an embrace of public permissionless networks. And this has actually started to show some real initial traction in the hundreds of millions and the billions of dollars, albeit still with a fairly limited number of investors. And I think in this third phase that we're slowly starting to enter, and we still may have more time in the second phase, is how do we go beyond just the crypto native investors and really expand who we distribute these tokenized securities to? And there's a couple of great tailwinds. We have traditional investors increasingly closing the infrastructure gaps to hold and interact with this stuff. Their custodians can now support it. They're experimenting with stablecoins, crypto trading, and these sort of hybrid firms that are embracing crypto but are really traditional and have large user bases. They may play a role in starting to extend tokenized securities to a wider investor base. And then that fourth phase is when will real institutions start to directly hold and invest in these things. And I think that all comes once really the network effects have proven themselves, and it's too compelling to really ignore.
Yeah, you say real institutions. I think some of the names up here on this panel are as real as you can get, and it's exciting to kind of see you guys taking strides in what you guys are doing. Nick, I think, I was looking at one of your interviews last year thinking about how big this space has grown. There was a new report released from Dune and the rest of the conference here looking at the growth of this space. I think like 224% since last year. I know we're starting at a very small base, but how do you put into context the speed at which things are turning now?
Yeah, I mean, I 100% agree with Max on those kind of like three phases. I think I'm maybe a little more bearish on how close we are to phase 3. Like I actually think it's going to take quite a bit longer in phase 2. Like one data point, look at IBIT. Okay, the growth of IBIT. I think people in crypto are like extremely excited about the growth of that product for good reason. It's literally the most successful new ETF launched in the US in the last 5 years. Like that it's an incredible success story. But the flip side of that is all people who don't want to bring their money on chain, right? Like you could not have, like every one of those people could have bought Bitcoin the day before, or, right? Ethereum, all of this, growth is like very explosive growth. But by the way, like number 3 largest product launched in the last 5 years, also a Bitcoin ETF. Like all of that capital is capital from investors who, for whatever reason, are more comfortable owning Bitcoin in their brokerage account than they were owning it on chain. So I think we have, unfortunately, like quite a while before there is a significant number of investors who are bringing capital on chain for the purpose of investing in tokenized funds. Now, that's not, for me, like bearish overall. Like we are absolutely should be doing what we're doing, but we have to recognize that there's a significant amount of scale that we need to get to with on-chain capital before we really see off-chain capital coming on-chain for the purpose of investing in real-world assets, right? So growth, yeah, like 25, it is incredible, actually, like really incredible to see 25 billion plus, it depends on how you measure it, in kind of tokenized funds that are now out there. And it's fast relative to, 35 years ago at the beginning of the ETF industry and all of those things. But we have like an incredibly long way to go. There's, $12 trillion just in the US ETF market. So I think we will see rapid growth, but I think we have to be realistic that it has to come from existing on-chain capital. And that can be individual investors. That can be, people who are using Tether to dollarize their deposits in Africa. There's many different pools of that capital that are like, they're real money and we're serving real investor needs. But I think it's a little optimistic to think we're going to leapfrog quickly to existing scaled institutions bringing money on chain for the purpose of investing things that they could have invested in off chain.
Well, and then, just to add on to this question, I agree with Max and Nick on all of their comments. Having spent the decade in that first phase, like doing over 50 use cases on permissioned blockchain, I think, a couple of things like we've learned, which is we always talk about blockchain as super efficient and automated and DVP settlement, yes, sure. But that hasn't, in the many use cases that I've run, hasn't ever been enough of a draw to get people to change their behaviors, to get them to, basically change their systems. And keep in mind, you have to invest in these systems, right? So what actually, changes behavior, what actually sort of drives, sort of shift in systems. And it's about new products, new offerings, things that you could not do with, legacy, quote unquote, legacy systems that you could do now with blockchain systems, and also commercials. That's kind of the bottom line. As interesting as blockchain is, there's the commerciality that drives all of us, right? And so, I think especially, from our seat at Apollo, we have fantastic partners that are in the audience. We're always trying to push the envelope to try to understand, how do we give our assets superpowers, right? It's not let me just, put Apollo private credit on chain and hooray, now you can access the same exact thing that you can access off chain, maybe even easier. But this is why, we spend an enormous amount of time with our partners exploring DeFi. Because, for example, in, one of the pioneering projects that we did with Gauntlet, on Morpho, essentially what we were able to demonstrate was, what the Gauntlet team and Securitized team did was actually enable Apollo private credit to be used as collateral in a Morpho DeFi borrow lend protocol, essentially enabling Apollo private credit holders to, post their ACRED position, borrow 50% LTV at I think at that time, Ro, keep me honest, it was a 1.5% cost of capital. Now it's 4%, which is still pretty good. Basically enabling people to enhance their returns from 7% to 15%. Now, that's kind of a really interesting innovation, in that certainly NAV lending facilities exist today that are offered by private banks, but do you really have one on demand? Do you really have one that, doesn't have like, let's say like a minimum of like millions of dollars to like actually paper one up? So, this is sort of like, I think, where we will get to the third phase, timescale unclear. But it really will not, it's not going to be like us standing around saying like, when will they come? It's going to be the crypto native audience here that keeps pushing the boundaries to give these assets superpowers that actually build something compelling enough that is 10x what exists today, that will actually drive like, the next wave of adoption for like normal people to start using these systems.
Yeah, I mean, your points there in terms of product market fit and what is the thing that tokenization is unlocking depends on what we're really talking about. So let's see if we can kind of bring the focus of my question, this next question, a little bit closer, because we were chatting before this around stablecoins. Clearly, one of those pieces that has found product market fit globally, perhaps because a lot of people who buy them outside the US don't have access to something as stable as the dollar. But you guys are all working in very different spaces, whether it's CLOs or money market fund or private credit. I mean, when it comes to those big unlocks, is it really about access to these products? Is it about composability, permissionlessness? Is eventually we get there? Like, what is the piece that you think will be the unlock that is still to come, that will accelerate, maybe where there are some discrepancies in how quickly we get there, but what are those things that could change the answer?
Well, I actually don't think our products are that different. And all three of these products have shown significant, or not significant, maybe relative to traditional finance, but meaningful success in adoption. And I think the reason that is like we all said, the target here really is the crypto natives. And these products, they're all sort of complementary to a crypto trader, whether it's, treasury yield from a money market fund or slightly higher yield with, very strong AAA credit ratings, or extra high yield but still solid stability. They're all complementary to someone who is trading crypto on the side, and that is that target user base. And for them, we still have a very long way to go to really bring that utility up. We have started to show some, examples. There's a couple exchanges that might accept as collateral, some DeFi protocols, but we are just scratching the surface in terms of really unlocking the broad-based utility and integration of these assets. Because as we all agree, it's not worth it to just put it on chain. You really need to do something cool with it, and there's a lot more room. And I think everyone in the ecosystem should focus more on doing more and bringing more utility on the products that we have, and less necessarily on bringing a really long tail of products.
Yeah, I mean, I definitely agree that what we don't need is like 5,000 new products, right? And so the thing that's going to bring institutions on chain is when they can do things on chain that they can't do off chain. And there's like some very basic things, lending, right? But there's atomic settlement. There's all the stuff we all know about, right? None of those things are valuable until there's enough of a network effect, and that network is going to have to get built with sort of the DeFi community first, right? And so it's exactly that. It's finding these use cases, even if they're not like the most incredible use case. If they build network effect, right? They build increased transaction volume that then justifies things like market makers coming on chain, like all of those pieces, until there's a whole ecosystem there with, doesn't need to be a huge number of products or the most exotic products. Like there's a reason that a lot of them are yield products, because there's, lots of lending that goes on online and or in DeFi, and ultimately like that's all spread trading. And so if we can get more integrations into more protocols, like more use cases, build liquidity, then all of a sudden you get to that critical mass where there is a justifiable reason for a traditional investor to be like, yeah, okay, I could buy JAAA, on the exchange, but there's these other things that I can do with it here that I can't do. That's when they're going to come.
Yeah, I also think like a huge unlock of blockchain-based systems is the multi-asset nature that enables the open architecture. I mean, just talking today about how we have 3 different products out there in the ecosystem. Like I said, it's really not necessarily just about the settlement, but actually what you can do when you have different assets that never really exist in the same system together, and you can program them. You can essentially make it as programmable as building SaaS software. The idea of putting dollars and treasuries and AAA CLOs and private credit, and certainly some of our partners out here tokenizing equities, both public and private. What does that get you? That gets you an entirely balanced and diversified investment portfolio. / bank account, right? Actually, in crypto wallets, like what's happening today that people aren't really talking about is that there's actually conflation of bank accounts and investment accounts, whereas, in a regular world, we kind of keep them separate. And so, and I think that if there was anything that we've learned about smart contracts and DeFi is that smart contracts are incredible at rebalancing like different types of assets. It's just that to date, it has been like different types of crypto assets, which, are all part of your existing diversified portfolios. But in the future, and talking about expanding access, talking about like, let's say the depositors of Tether, like in the future, you can have like an expertly designed, diversified portfolio composed of, stables, treasuries, AAA, CLOs, private credit, equities, designed by an expert financial advisor. Could be like your classic, like Morgan Stanley, UBS, could be, your next generation vault curator. And essentially, regardless of if you have millions of dollars, thousands of dollars, hundreds of dollars, or tens of dollars, you will still be able to have perfect, like a really well-designed, yielding and fully invested portfolio just for you, just at a click of like your crypto wallet. And I think that's like really incredible. Like, when we think about how do we, at Apollo, like our main mission, I know this sounds really cheesy, is like to help people save better, to help people retire better. I know all of you young crypto people are like, literally, like, what are we retiring for? Maybe early retirement.
They're already retired.
Yeah,
They're
early
already,
retirement if you invest in like your Apollo product. But like, basically, like in the broader world, like why do we do what we do? We generate alpha, we create yield so that people can take their savings and live off of it really well and retire off of it really well. And, to be able to broaden that access to not only everyone that we do today, the next swath of, broader retail investors, but even like the underbanked and unbanked people who are now adopting stablecoins in their wallets. I think that's an incredible like expansion of financial services that, I'm here for.
Yeah, no, that's a hell of a rallying cry. I don't know if that got you guys as jazzed as I did. But that's why we get out of bed. No, that's why we do it. That's why we get up in the morning. But I think with that, if I could reflect on it too, is like, we've all been through cycles. So we've seen the ups, we've seen the downs, we've seen the enthusiasm, we've seen when it might go too far. And we've seen kind of the risks maybe before other people. And for right now, I think it's super exciting because finally we're able to experiment with this technology in a new way. And you guys are doing it at size, whereas before maybe it was just tinkering. So I'd be curious to hear your guys' takes too on at the speed of how fast this is moving, because I would take the stance it's moving fast. Max, we were chatting about before when maybe some things move too fast in prior cycles. You can look at Terra, I interviewed Do Kwon and that collapse. You can look at what happened with FTX, which is totally different from I think anything else that we're going to talk about on this panel. But like the idea of what potentially you guys could see when you take a system that was built all around, hey, we're building Bitcoin because we don't like bailouts and risk going too far. Now plugging into a system that has had its experience with that. Are there any risks that you see that might be different when it comes to an on-chain world versus an off-chain one?
Yeah. In some ways, there are areas where risks are reduced. You could think about that as transparency. There are other areas where you do need a certain level of sophistication given the status of the infrastructure today. Wallet security, right? Yep. That becomes, that's one of the big reasons people maybe, sometimes hold traditional stocks versus tokenized stocks. You can't get your brokerage account hacked, or maybe you can, but significantly harder. So there's a lot of investor education that needs to take place right now, but like what we're all doing, we're targeting the people who are a little bit more familiar and more sophisticated with this technology. And I think part of the thing that's going to help us get to that next wave of adoption is improvements in the infrastructure so that it's not easy to just lose your private key or have someone phish your key from you and send your assets to the wrong place.
Yeah. The investor education thing is a really big deal. I'm talking about CLOs, so I'll use that as an example, right? There's a 30-year-old asset class, massive, $1 trillion when we launched the first ETF 5 years ago. And in that entire 5 years, even to like relatively sophisticated investors, we are still having like extremely basic conversations about what a CLO is, how it works, like what am I giving up in order to get this extra 1 or 2% yield, like all those types of conversations. If you look at the ETF model, 35 years of ETFs, and still it's very basic conversations on like what is an ETF. You know, my mom still calls it an EFT. Like, you know, like there's like basic investor education.
Sure.
If you extend to the like amazing future that Christine is painting, okay, let's take the example of somebody who's unbanked and they're buying Tether in, you know, the developing world because it's the only way to dollarize deposits. Okay, that's like, to me, like an incredibly powerful use case that is like delivering real good to those human beings. Well, the next step is, right, well, why would they hold it in dollars? Like, what if they can just like buy their groceries with the S&P 500, right? Like, there's no reason it has to be dollars. It could be any asset, right? So their wallet could all just be S&P 500. Okay, well, what kind of education is required for those people, right, that we're talking about that were, you know, a year ago unbanked, and now all of their assets are in the S&P 500, understanding the risks, like how do they think about it? Like, so there is a huge amount of investor education that has to happen if we deliver on the promise of just democratizing risk assets and making them available to everybody. So I'm extremely bullish. I think the downside is very small relative to the upside, but to me, that is the risk. There will certainly be stories of people who put their small amount of life savings into an inappropriate product. I mean, that's happening today in crypto already, but for traditional financial institutions, you know, that to us is a concern. Like, we don't want anybody to have a negative financial experience due to a product that we've built.
Yeah.
And, you know, I think that's a hard one to tackle.
That's why I said expertly designed portfolio by like a proper portfolio construction, sort of person.
I've committed the cardinal sin too, of taking your enthusiasm and then bringing up risks, but it was the journalist in me to just play both sides. But no, I agree that all of this is happening fast and it is unlocking opportunities that didn't exist before. And I think that is obviously, as the same thing as Christine said, is why we get up in the morning to try and, you know, push this industry forward. I do think too, obviously we'd be remiss if we didn't talk kind of about what's changing in DC, just in terms of the idea of, again, going from you can't do anything to now let's work with regulators to understand what this opportunity is for America, really, I think, as a country. It's been very fascinating in my chats with the SEC and Hester Peirce and the Crypto Task Force to kind of get to this point. I mean, what has it done to you guys specifically in getting these products greenlit, or the enthusiasm that's now there when even you have these partnership discussions? What have you seen? How big of a night and day has it been for you? Because for us, it went from potentially being sued to not. And I guess maybe that's not too dissimilar from the people in the audience.
Want to start?
Oh.
Yeah, the SEC is coming up next. I mean,
they are coming up next. So we will. I mean, I could ask you about them.
I don't see.
No, I mean, I guess my comments are, you know, coming from the traditional financial institution world, like anything that we do always gets run through with the regulators, and we've always found them to be, you know, really helpful in having a dialogue and understanding like how we can do new things. I get extremely tickled every time I hear, Chairman Paul Atkins say that we're going to have the United States as, you know, the best place to access crypto markets. I think that, you know, like he said it at the SEC Crypto Task Force tokenization discussion. I think he pretty much ends a lot of his crypto-related keynotes like that. And it gives me like, you know, a lot of motivation and excitement that, basically that regulators are behind us and, you know, actively working to help us evolve the industry in the right direction. So, yeah, I mean, like, it's been fantastic. And like I said, I literally get like personally tickled every time I hear him say that, or every time I see like someone put like a tweet, kind of annotation or a video on it, because, you know, have been in the industry for a long time. And certainly as there have been a lot of misconception, really hope that this is where we do break through. So, you know, it's not without risks. And, you know, I think for anyone who's been in the space for as long as we have, like, you know, it's like super exciting. We're almost there. It's going to happen. Oh my God, no, it's not. Like, now something's happened and it's like totally destroyed and we need to go get fintech jobs. And then like, oh my God, like now we're super relevant again. It's amazing. So like, you know, I think, you know, certainly braced for change and what's possible, like to the downside.
Sure.
But, productively, like cautiously hopeful for, you know, our breakout here. And for all of you in the room that are building and working, like this is our, you know, second lease on life or maybe third lease on life. I'm not sure. There's always like, we've got 9 lives, but like we got to run it super hard and like make sure we're really making those real world use cases, you know, like cogent, comprehensive, like commercial and, you know, have with good user experience to kind of get to that next phase that we want to get to.
Yeah, no, I think it's a good way to kind of wrap up in our last 5 minutes of this too, because I asked the question mostly because clearly there's a lot that's going to be happening even with the rest of this year. Historically, Q4 a very strong month for crypto. And I mean, even some of the larger stablecoin companies are now launching second stablecoin. So it's like things are accelerating in a very fast way. And so to wrap up, I guess I'd love to get your guys' takes on maybe some things that people are sleeping on, the alpha part of the audience discussion here. Not discussion, but alpha leak for everyone out there. What has you guys most excited of what's to come, perhaps what you guys are working on right now, that a lot of people might be sleeping on?
So I do think we've touched on this a little bit, but it's really that second step of really deep integrations and utility coming to these tokenized securities. I think one of the things that has plagued the real adoption of these products for a very long time is the onboarding friction. If you have to get each new user to do a brand new KYC, it can be quite challenging. In the traditional world, everyone's already done that. Products move as if they're moving freely. And I think that next stage of broad-based distribution, still to the existing kind of crypto universe, I think that's going to be a really nice way to get these products in a much broader number of investors' hands.
I mean, in my mind, the promise, big picture of blockchain taking over traditional finance is all around delivering effectively a massive collapsing of cost and layers of inefficiency because of all the intermediary steps. And we're very far away from that today. Like, in the fact of the matter is, today for a traditional investor, it is generally speaking cheaper and more efficient to buy assets off-chain than on-chain, right? So the benefits aren't even being realized. So how do we get over that hurdle? The way we get over that hurdle is the traditional providers of these traditional services moving those services on-chain. Like, I think the announcement last week, I guess it was from NASDAQ, is by far like the most significant thing that has been announced in the blockchain world ever, if it happens, right? Like, that is massive shift in core financial infrastructure moving on chain. And that then moves into, custody platforms, clearing platforms, all those things. So to me, over the next, whatever it is, to get us from 2 to 3, what has to happen is simultaneously real utility happening with on-chain investors and all of the work in the background for traditional investors to move the core components on-chain such that they can come and realize those cost savings. So if I was starting and building in the space, like, it would be that. It would be the infrastructure, right? It's the custody, it's the clearing, it's all those services. And as soon as we get those more efficient, then we can bring the end products on chain like extremely fast. And I think the adoption is extremely quick. Whether that takes a year or 5 years, I don't know. But I didn't say a year, 15 years, right? I don't think it's that far out.
Christine, you can take us home.
Sure. My alpha leak has already been leaked, which is Apollo Private Credit has launched on the Plume blockchain, thanks to our host, Centrifuge, with a $50 million anchor investment by Growth, sub-DAO of Sky. So super proud, that's coming out today or came out today. So thanks everybody for the support. So there's your alpha leak. So I guess is it post alpha? Is that okay?
Yeah, that's fine. I think that fits with the theme.
That's all I got. That's what I've been working towards.
That fits with the theme, I suppose, in terms of where we are going, where we've been, and no, I think it's an extremely exciting time, most generally, and I enjoyed the enthusiastic reminder that this is why we're trying to do it, is to make it a little bit easier and more efficient, as the case has been. But congrats to you guys on what you guys have been building, and thank you guys so much for letting us share the stage with y'all for just a little bit here. Appreciate it. Thank you guys.
Thank you.
Thank you.